everyone, Tom Gentile. Welcome to Tom's Trading Room. And today, as you can tell by how I'm dressed, we're going to take a look at the travel sector. We're going to look at the airline stocks, and I want to focus on SouthWest Airlines. We'll take a look at the fundamentals, the technicals, as well as what I believe is the proper place to buy this stock if you love it. Finally, I want to show you how you can buy the stock at a major discount while getting paid in the process. So let's get going. Now, taking a look at Southwest's financial breakdowns, things were looking good for this company. I mean, they were making money. Their costs were relatively in line. They had great gross profits. Even net after taxes looked good, was a positive number. But we can't just look at these kind of numbers anymore. All right, you've got to look and see where the analysts are based on what has now happened, not only to this company, but this entire space as well. So when you look at earnings estimates going forward with SouthWest Airlines, it's pretty grim. I mean, current quarter, they're looking at an average estimate of a 39 cents per share loss. Then it really gets messy. All right, second quarter projection, $2.72. Current year, over the year, they're looking at $2.83 loss. They don't expect profitability until sometime in the beginning of 2021. Now, I like the low estimates. All right, I like to see the low estimates, which are really 2 to 3 times as bad as what the average estimate is, because I don't think we know enough about what's going on in the airlines right now to give any kind of a real estimate. In fact, I think things could get progressively worse when we're talking about 40% capacity, in terms of giving people some space between each other. I mean, is it possible that you're going to have more room in coach than in first class? It might very well be possible. The sales growths look terrible, right? You start looking at growth for next year, you're talking about current quarter right now off 13.6% in terms of growth, but look at what happens in the quarter ending in June. 73% drop in growth. For the year, over 40% drop in growth, and even next year, they finally get a growth number that says 54%, but that's based off of all the problems that happened this particular year. Okay, before I get into the technicals, I just want to let you know I'm using my software at tomsoptiontools.com. If you're interested in having a look at this, I'll provide a link at the bottom of the screen. Okay, let's take a look at the technicals, not only of SouthWest Airlines, but I want to show you how I got to SouthWest Airlines to begin with. So what we're looking at right now is the Consumer Discretionary Sector ETF. The symbol is XLY. As you can see, it's made a move from the low 130s. That was back at the end of February. By the end of March, we were down at $85, but we've made a nice recovery in the consumer discretionary sector. This is fantastic because it's telling you that there's a lot of buying. There's a lot of buying bids in discretionary sectors. But what about the airline sector? Well, I did find an ETF, and the ETF we're looking at here is JETS. This is the U.S. Global JETS ETF. Oh, this is not something that's made any kind of a rebound. In fact, it's gone from the low 30s down to a low of 12, and it's been hugging that low of 12 and actually came up a little bit and is now sitting right around $13.76 a share as of this video, right? But now let's take a look at SouthWest Airlines, symbol LUV. SouthWest Airlines was a $58 stock that dropped all the way down to just above 30, and it hung out there above 30 around the middle of March. Popped up to the low 40s, back down to 30, back up to now the mid 30s, and now once again back down here to 30. This pattern that you see technically is something called a bearish triangle, where we have the same support level, but we have lower resistance, all right? So your resistance levels are dropping, support levels staying the same. Where are we likely to go? All right, well, it looks like if you take the distance between where we were at the low 30s to the low 40s, that puts us somewhere down between $20 and $25 a share, technically. All right? Now, we could go and look at some other areas of technical analysis when it comes to SouthWest Airlines. For instance, I looked at a high-low ranker, And I looked at the high-low ranking just to see what of the 23 stocks that are in the airline sector, which ones look the strongest, which ones look the weakest. And I got to tell you, SouthWest Airlines is not looking good in terms of the strong or weak area. Here it is, number one. Now, number one doesn't mean it's a great stock. Number one means that it is the stock that it's on its lowest of its 52-week range. All right, that's the worst, followed by Allegiant Travel, Delta Airlines, American, China, etc. Now, the one thing about stocks that drop this low is eventually there's going to be an area where buyers are going to come in. The questions you and I need to ask ourselves, and they're basically two. Number one, what is a good price to buy SouthWest Airlines at? And number two, are they going to go bankrupt? Is this going to be a bad investment? Now, while I don't believe SouthWest Airlines is one of those too big to fail companies, it is a company that might be scooped up by a major. So that gives it some protection as well. All right? That might make it a good investment, but not at today's prices. I would say somewhere between 20 and 25 make a lot of sense. I want to show you one more chart that will help us describe that. And that would be if we look at the stock charts of Southwest, but a little differently, what you see here is a probability chart. Now, a probability chart takes a look at all of the data that we've had in the past with Southwest Airlines. And what it does is it actually tells us there, based on that data, where it is likely to go. So if you can see the range where we were at 55, down to 30, and these drops, these lower highs, takes all of this statistical data into its algorithm, and it determines that Southwest Airlines has a 68% chance, if we go forward 30 to 40 days in the future, of staying between $25 a share and the area of about 38. There's a 95% probability that we're going to stay inside the blue cones. And the blue cones on the high side, around 47, on the low side, 20. So remember my area, my buy zone, $20 to $25 a share. All right, that's step one. Step two is finding the actual trade. Now, as stock traders, we could simply say, all right, you know what? I'm going to buy it at 22.5, but not until it gets down to 22.5. That's a limit order. The other thing I could do is I could get paid to buy this stock at 22.5, and here's how that works. That works by using an option trade, which is selling a put option. Selling a put option obligates you to buy the stock at that strike price. Now, for that obligation, you get paid to do so. So if you take a look at the June 19th, 2020, 20 puts, right? This is going to obligate me to buy at 20, but we were in between 20 and 25. So what I want to actually look at is the 22 half puts, right down the middle. The 22 and a half puts are selling right now for $1.30. So I'm going to get paid $1.30 to sell to sell these puts and obligate me to buy the stock at 22 and a half. What does that mean for my pocket? First, let's say I was interested in buying 1,000 shares of Southwest Airlines, but only at 22 and a half. All right, if I put my limit order in and it comes down, I could buy it at 22 and a half. That's $22,500 for 1,000 shares. However, if I take this trade, I will get paid $1,300 to literally do the exact same thing. $1,300 for 1,000 shares of stock. Now, I still have to buy the stock at 22 and a half if it gets put to me. In order for that to happen, it has to go below 22 and a half. But at 22 and a half or below, I'm already buying the stock anyway. Why not get paid to buy the stock too? Why not collect $1,300, which comes off of your $22,500, gives you a little bit better break even, and if Southwest Airlines never makes it to 22 and a half and it kind of hangs out above that, I get to keep the premium. So that's the way that I like to buy stocks like Southwest Airlines. Again, we're analyzing the stock. We're getting an idea of the highest probability that we can get buying that stock at a discount, taking that probability and equating it into a put option, which we sell, we take in premium, and then we simply wait. Hey, hope you enjoyed the video. All of my videos can be found right here at Tom's Trading Room. Be sure to like the video if you like it and hit that subscribe button. You'll get all of my videos in a timely manner. Thanks again for joining me. I'll see you on the next one. Bye now.